So this was supposed to be Tesla's year, and just up until a month ago, it was going great. Tesla was up 100% of the past year. Things were good, and then all of a sudden, we're getting all this red, trading a lot lower than what people thought Tesla would be at this juncture. And of course, like in every team, whenever we have a few losses, all of a sudden, nobody gets along. All of a sudden, the questions start coming up. Well, is Elon Musk distracted? Doge, X, he has so much on his plate. Maybe he's neglecting Tesla. Maybe the Chinese EV manufacturers are eating Tesla's lunch. Is this the end for Tesla? Is this the right time to take some profits, trim, maybe sell, leave this company? Maybe it is. I don't know. But one thing is for certain, I'm not going to make this decision based on emotions and a gut feeling, because when I have a gut feeling, I go to the toilet. I'm not going to be watching mainstream media with their panic. I'm not going to be watching the social media with their engagement farming. I'm going to use my brain, analyze this like a grown-up, not going to be a headless chicken, and make a decision based on analysis and logic, like a long-term investor should, right? So let's do this together. Let me educate you. Let me show you the process so we can build good habits. Maybe at the end of this process, we decided we need to trim a little bit of Tesla. Maybe we need to sell 100% of Tesla. Maybe it's time to hold and sit back. Maybe it's time to double down. But the decision, number one, is going to be yours and yours alone, not mainstream media driven, not social media driven. And number two, it's going to be based on facts, data, analysis, not emotions. Okay. So number one.
I have a feeling this is going to get really rough. Tom, I apologize ahead of time, because I feel like you and I are going to be very, very, very at odds with this. But let's go.
Pay attention. Tesla has done one thing really great over the past 5 years, which is to punish the traders in the short term and reward the long-term investors that just hold and buy, hold and buy, hold and buy Tesla. It is a pattern that has repeated itself again and again and again. I'll show you. Even though Tesla's currently just punished the traders by 20% of the past month, and that's painful, look at what Tesla has done.
So I just changed these to monthly candles here. I was curious what to see long term, what this looks like. What is he looking at here? 6 months. That's a weird chart to be looking at, by the way. But let's go to the 6 month time frame. I mean, this is brutal. This is really, really, really brutal, right? In fact, just a couple of days ago, I actually put in the Discord, I said, tell me how much money I saved you, specifically on Tesla, by telling you that it's starting a stage 4 downtrend. And I got several 5,000, 15,000, many, many thousands of dollars of people saying, hey, you know what? You saved me a buttload of money on Tesla, right? Let's review real quick what the market cycle looks like. So stage 1 is the bottom down here. And this is where prices are trying to figure out if they're going to go up, if they're going to go down, but mainly they go sideways. Stage 2 is this uptrend right here. This is the only time you make money. The only time you make money, okay? This is what you want. This is this side, right? That's this side here. Stage 3 is the topping pattern up here, where people are going from belief to thrill to euphoria. And then they're saying, well, you know, it's okay. I can hold this long term. And then they start to get a little bit worried. And then they start to get in denial that there's no way that this could be going down. And then they start to panic. We are not in panic yet. When panic happens, it won't be big gaps down. It'll be giant red bars. Like the selling is all day long, and then all day long, and then all day long. We haven't seen panic in the market yet on any stock, in my opinion. So if we were to compare, right, and we're looking at, let's go to the beginning of the year. This is so good. This is so perfect. This is the beginning of the year, right? There's your stage 1, where it's trying to figure out if it's going to go up or down. Nothing's really happened. It might go up a little bit, little down a little bit. And then here's your stage 2, right? We can see that this is this, right? Let me scoot it over just a little bit so you can see what I mean. They lay on top of each other perfectly. If I were to put a number on it, I'd say it's number 7 anxiety. Okay. Now what happens next? What happens next is right now the trend is pointing down. I'm not calling for a crash. I would never call for a crash in any stock. But what I'm saying is the trend is currently going down. So to me, this is not a stock I would own. In fact, I did a video on the weekend and I gave my top 3 picks of the week, which I got a lot of feedback on how good those were. And then I also said my top 3 I would avoid like the plague, and Tesla was one of them. Now, I'm not a Tesla hater. I own a Tesla. I own a Tesla Model Y Performance, right? I don't care if the stock goes up or down, and you shouldn't either. And what do I mean by that? Is that you as a trader, you as an investor should be completely objective, because the only way that you or I or anyone else in the market makes money is on this slope of hope, not down the wall of worry. Okay. The slope of hope is where you get paid, and you don't get paid in the wall of worry. Okay. So let me introduce myself real quick and we'll get back to the video. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now, I definitely want you to rank this video out of 10 after we get done, but go ahead and subscribe if you haven't done so already. So let's go back and see what Tom has to say.
Let's zoom out. Look at what Tesla has done over the past 6 months. Over the past 5 years, Tesla has given its long-term investors 515%. Now, the insane part about this.
Hold on. Look at this chart. Okay. It has given them, in this case, 532%. The only time it's given them 532%. The only time it's given them 532% was when it was going up, not when it's going down, not when it looks like this. So Tom, you know this. The only time it's paid is only price pays. It's when it's going up.
Has given its long-term investors 515%. Now, the insane part about...
Ooh, Ryan nailed it. Well, it should go back up. It should, right? Everybody's been saying AMD should go back up as well. And as we know, that's not worked out too great, right? Should is the most dangerous word in all of finance.
About this is that we're talking about a company that's $1 trillion company, a top 10 global company that has given its investors 515% in 5 years. Show me a company that's in the top 10 that does that.
Only when it's going up.
It is insane. So if you held Tesla over the past 5 years, you've made 500%. Heck, if you held Tesla over the past...
And let's also keep in mind, right? How do we know that it's going up? You guys know. Put it in the chat. Put my 3 numbers to tell if a stock is going up or if a stock is going down. You know this. I know you know this, right? It's when the outlier trend template sets up with the 10 over the 20 with price over the 50. And then you're not guessing. Oh, is this going up? Oh, is it going down? Just math. It's literally math. You can't argue with me on this. It's 10, 20, 50. When 10, 20, 50 are crossed up, then it's a bullish trend. And when it closes under the 10, I get out. But you may get out under the 20. You may get out under the 50, right? And sometimes you're going to get chopped up a little bit. Sometimes you might lose $1. You might make $1. And that's part of the game. But when the trend is running, like this example right here from November of 2024, just like rocket ships up, right? What do you see right there? You see the moving averages all stacked together, right? Like Nathan's got it, Rick's got it, Decadent Wolf's got it, Adam's got it, Bjorn's got it, right? This is what we need to see. This is the only time you're getting paid. And if it closes under the 10, look. This is why I always use the 10, right? One close under the 10 right here. And then it didn't close under the 10 from November 5th. Came close, but didn't close under. Until December 20th. Okay? December 20th. What kind of move was that? From the first close under to the next close under. It's a 70% move in 33 days. Good gravy. All right? And now, this is the reason why when it closes under the 10, that is a big red flag. What happened after that? It had one close under the 10, started going sideways, and then it's over. Now it's hitting that stage 4 downtrend. Right? If Tom says Tesla can go to 50, 150 or 50, well, I don't know. Richard's got it. Could you briefly explain the relevance of EMA versus SMAs? Okay, so an exponential moving average moves faster than a simple moving average. An exponential moving average is more reflective of today's price versus a simple. In fact, let me throw a couple simples on here and we'll do a little comparison real quick. That was an excellent question. We'll just do the 10s. Actually, no, let's do the 20s. That's the intermediate point or midterm point. Let's just do that real quick. So I'll go over here. I'll add a simple moving average. And we're going to make it big so we can see it real thick. That's how I like it. We'll make it bright green. Apply. Okay. So this is the 20 period moving average. Let me double check that I got that. Yeah. This is the 20 period exponential versus the 20 period simple moving average. You can see the simple moving average is a little bit slower, right? This exponential moved a lot faster in a few of these places. Okay. And that's the reason why. That's the reason why I use exponential over simple. People have found that to be a much more reliable indicator, and I tend to agree with them. Great question. Richard, I get out when I see a profit, not too large, not too small. Just get out. You can always buy back. Adam says he's hurting in Tesla put today. Well, that's okay. The Tesla's getting monkey hammered. That's for dang sure.
12 months, you're up almost 80% on your money on a top $10 trillion company. Now, this zoom out allows us to understand the principle of Tesla. It's an insanely volatile stock. It's almost this manic depressive behavior.
Oh, it is an insanely volatile stock. Now, how do you measure volatility? This is how I measure it with the ATR indicator down here. And let me give you some perspective here, right? This is a $20 average move for Tesla over the last 14 days. That's what this says right down here. Okay, I'm going to zoom all the way over. 1993. So basically a $20 move on average over the last 14 days. And let's compare that to the SPY. The SPY is nearly twice as much in value, yet its average true range is $6. So if you want to put that in context, the Tesla moves 3 times as much as the market does. Like, that's how volatile it is. That's super volatile
with this particular stock, but it always does the same thing: punish the short-term speculators and reward the long-term holders of the stock. Now, in this video, we're going to find out if we're still long-term believers in this stock. That's the only question you need to ask yourself. The price is not a reason to buy. The price is not a reason to sell. You should.
Okay, well, that was fun. I have a new character that I wanted to introduce today. This is called the Bullhorn of Shame. Only price pays. Let me turn up the volume on this. Only price pays. Sorry, I just had to make that abundantly clear. Only price pays. So we'll use that on occasion, but I had to introduce that today because he's 1,000% wrong. 1,000 million jillion, impossibly 1.21 gigawatts percent wrong.
Should never make buying and selling investing decisions based on what the price is. The price goes up, people start buying. The price drops, people start selling. Price has nothing to do with your long-term investing decisions.
It should. Sure as hell should. Right? Why? Because this is how the market works, right? When people get stoked and they're excited and they're screaming to buy, they all got their megaphones and they're like, oh, we gotta buy, we gotta buy, we gotta buy, right? And if you are long-term, bro, be long-term. That's cool. But that doesn't mean you have to hold it when it's going down. If you're a long-term investor, you can follow one long-term moving average. Maybe you follow the 50-period moving average, right? If you're a long-term investor and this 10, 20, 50 nonsense is just far too difficult to understand, you can add in the 50-period moving average. So one close over to one close under, that's a 58% gain, and you didn't have to do a damn thing for 67 days. I'm getting a little hot under the collar because this is completely wrong, Tom, and you know it. You know it, Tom. You know. You're holding on. This is a beginner investor mistake. You know better than this. Tom, I hope you're watching this because you know better. Only price is going to pay you. And right now, you're losing money hand over fist. Sure, it's up today, but this bearish trend is eating your lunch.
Is the 100% sole factor. Only price matters if you're a trader. 100%. If you're a trader, only price matters. But as a
Thank you.
long-term, uber long-term investor, if all you care about is where the stock is going to be in 10, 15, 20 years, price at this point in time does not matter. The only thing that matters is the fundamentals of the.
But the fundamentals aren't going to pay you. The fundamentals will do absolutely nothing for your bank account. Your bank account grows when price goes up. And like I say, Tom, just throw one moving average on there. Just the 50 period, right? Just the 50 period. And that's going to keep you in a trend when it's running and get you out of the trend when it's not. And you can always get back in. And that's I don't understand. My itty bitty baby brain just doesn't understand when people look at this and they say, I'm holding it long term. So that means I have to hold it through all these ups and downs. Why not just hold on the ups and then not hold it on the downs? Well, I don't want to pay taxes on it. So you're cool with losing 20% of your investment, but you're not cool with paying taxes. Boggles my mind.
Of the company. And I know that a lot of traders see this as almost blasphemous to say, but that's why it's apples and oranges. For long-term investors, you have to know who you are. For long-term investors, price does not matter. Okay, now let's look at the fundamentals so we can make a decision. Maybe the thesis for Tesla over the past few years has deteriorated. Now we need to sell, trim. Let's look at the fundamentals, right? That's the important stuff. Now I have it here in my list, so let's just do it right now, right? So let's look at the 10 categories of this initial review of Tesla, just to kind of look from a 10,000 feet level, right? Revenues over the past 3 years are up from 53 billion to 98 billion. Okay, so Tesla has basically doubled its revenues over the past 3 years. Well, that seems fine. Cash up from 18 to 36 billion over the past 3 years. Double the cash. That seems fine. Well, the assets to liabilities ratio went up from 1.4 to 2. Well, that seems fine. The cash to debt went from 1.3 to 1.8. Well, that improved as well. Short interest went down to 2.2%. Less than 2.5% of people are shorting Tesla because, shorting Tesla was not a rewarding exercise ever. And right now, we have almost 50% institutional investors, a lot higher than we had 3 years ago, right? Revenue is growing a lot faster than the expenses. The company since IPO gave investors 2,000%. So if we look at these initial factors, the only two places where you would see a little bit of an issue with Tesla is number one, the valuation, currently trading at 100 forward PE, which is very high. It is a very high forward PE, and rightfully so, because every premium product, every premium stock is always going to be trading at a premium. Now, that means the stock is not for everyone. This means that a lot of investors will never touch a forward 100 PE, a forward PE of 100, no matter what. And I don't understand that. That's fine. But nevertheless, it is a thing. It's not a cheap company. Even at this current price, even after dropping 20%, it's still a very expensive company, as it should be. All premium companies are trading at a premium, right? Another thing is, yes, the margins right now are not great. It's trading at, this massive valuation, not because of the current margins. The current net margin of Tesla is 7%, which is still a lot better than the auto industry in general. But at 7% net margin, it's not great. It's not.
Okay. I don't want to listen anymore to that. This is why I do what I do. This is exactly why I do what I do. I get so many comments where someone's like, oh my gosh, the fundamentals on the stock were so great, yet the price is going down, right? It can be a fantastic company. It can be a fantastic company, but a terrible stock. It can be a fantastic stock and a terrible company. I just don't understand. I don't, in my heart of hearts, I do not understand why, if you are a long-term investor, you can't get out and then get back in. I don't understand that. Someone explain to me, if you're a long-term investor, why can't you get out? Why? Why can't you get out and then just get back in later? Right? Because at some point, market cycle investing, at some point, it might go back up. I don't know where it's going to go back up, but why can't you get out and get right back in when the things are working out? Please. Manny, I don't know if I want to let him finish. I don't know, man. What's up, JC? Mark, the smartest man I know. Lucy is very concerned listening to you from Employee of the Month chair. Lucy's dog. So I'm so conflicted right here. Manny, just for you, my friend, I'll give you a couple minutes.
It's not something to write home about. But that's the thing. If you look at Tesla as a car company, from the beginning, that analysis should be relevant for you, because as a car company, you would never pay a forward PE of 100, right? So Tesla's transitioning from this vehicle manufacturer to a software configuration, and that's why these net margins are absolutely relevant, and I'll tell you why. Now, obviously, there's a lot of short-term catalysts for Tesla, even before we'll talk about the big grand plans for the next 5 to 10 years. There's a lot of short-term catalysts that are coming that are going to push the stock in the short term up, I think, right? We have the refresh of the Model Y, we have the Cybertruck ramp-up.
Wait a minute. Did he just talk about only price paying? He wait, I turned it down too much. He literally just said something will happen to push the price of the stock up because only price pays. Which is it? Which is it?
Robotaxis are going to begin to launch. We're going to have a smaller sedan potentially launch. There's a lot of stuff going on. Energy is growing a lot faster than people thought, right? So there are short-term catalysts here, but Tesla is not banking on that. And Tesla investors, the ones that are holding religiously, are not looking at that and saying, well, that's our end game. What we as long-term investors of Tesla, and for disclosure, I'm a long-term investor of Tesla with a significant position. What we look at is three things. We look at Tesla as a software AI company, which means FSD, robotaxis, which is an implementation of FSD, and robotics and energy, right? Those three businesses are the real value of Tesla, not the vehicle production part. That's temporary. Nobody cares about that as long-term investors of Tesla. Well, maybe they do care about it, but that's not where.
Well, hang on. I think he's hitting. Does it not sound like he's hitting in this phase right here, which like is a perfect example of where this is at, right? He totally sounds anxiety, denial, panic. And Tom, I know you watch, dude. I know you know this. But please explain to me, why can't I get out if price is going down if I'm a long-term investor? I don't understand. What about time in the market beats time in the markets? What about it? Only price pays. I think the megaphone will live through tough times in the future. Rob Kraft, which I wish I had found you in this channel back in December rather than our favorite subject expert. Learned more in the last week and a bit than in months. Thinking about getting the software, but learning a bit more. Dude, I wish you found us back then as well. I've only made 2,100 videos on YouTube and you just found me? Where have you been, Rob? Where have you been? Let's rank this video. You rank it in the chat. Here's your criteria. And don't you dare put 7. I will ban you if you put 7. No, I won't ban you. But nobody gets a 7. All right. All right. Where are we at? Where are we at? You throw it in the chat. But if everyone follows Atler, how can we make money? Actually, Mari, if you think about it from that perspective, that's exactly what you want. If everybody's buying, that pushes the price up. If everybody's selling, that pushes the price down. Right? That's the herd mentality that we talk about, right? That's exactly how behavioral finance works. Yeah, it actually would work better. All right, Ryan with a -1. Damn it, Nathan. We need to have a talk, my friend. 2 for Manny. Join us, Rob Kraft. We're a fun community. I agree. It was a 4-month from launch from the Scottish guy. -1, 3, 5, 5, 2, 3, 5, 3, 4. Yeah, me too. Our favorite subject led us astray. 3, 3. I don't know what that means. Right, for those who don't trade, you shouldn't panic because you should sell now and then try to time the market and then hopefully get in an okay time after you pay and sell taxes. Yeah, why not? 3, 2, 4, 4, 4, 4.5, 2, 3. Wes, found Chris in September and I still feel like I barely found his channel. Aw, thanks, Wes. 3, 3, 8. Ooh, Sasha threw an 8 in there. Oh, Sasha was from Ireland. I didn't get a chance to say, hey, how you doing? 3. And LOL 2.7, just a sneak in the 7. I'm gonna throw this in a 2. I'm gonna throw this. I was gonna go 2.5, painful and frustrating, but I'm just gonna throw it as a 2. That was really painful, really painful. There are a lot of Tesla longs right now, a lot of Tesla shareholders who are doing exactly this. They're going through all the fundamentals and they're trying to justify why Tesla is such a great company. Listen, I love my car. I love my car so much. I wish there were more charging stations, but I love driving that car. It is so fun. My wife literally steals it from me on a daily basis because I work at home and she's like, well, I got to drive to her work. So she takes it, right? So yeah, she can't stay home all day. Like she goes stir crazy just over Christmas break. So she always has to be out of the house for sure. So yeah, I mean, legitimately Tesla ownership as a car, really cool. I want a Cybertruck so bad. But Tesla ownership in the company, not so great. Not so great. Oh, that's what you were trying to get to. If it goes to 50 or 150, that's okay. No, it's not. Manny, now I see what you were trying to say earlier. Okay. I already closed the video. Yeah, I don't know how far it's going to go, but that's okay. Thank you all for ranking this. I really appreciate it because Tesla's getting monkey hammered. All right, it is getting absolutely monkey hammered. But it's not monkey hammer time anymore. It's member highlight time. All right, so member highlight, just want to jump in the Discord real quick, and I saw a couple things. Party Van says, after years of denial, I finally understood that cutting losses is important. Sold more bags for a loss, but this money gave me the opportunity to go into more promising positions, and I even have gains today. Outstanding, Party Van. Let's go over to the Share You Big Wins. Din, hey, I think I saw Din in the comments. How you doing, Din? As a new investor, I read the books on the fundamentals, financial reports, and long trading. By the time I found tech stocks after Christmas, the market was moving away from them. I could have saved more than $3,000 had I discovered Outlier earlier. Sorry, I didn't have any big wins or big saves yet, but I do have a dozen small saves from value and growth holding stocks that I was holding. After 2 weeks, I learned enough to pay for the annual subscription with a 50% win rate on Outliers and a market trending down. Still got a lot to learn, but the market is irrational and only price pays. Outstanding. And then Ryan just sold my option in BIN. Got the signal last month from Outlier. Not a lot of cash for the first put, but a 1,200% gain with the Outlier signal. Way to go, Ryan. And then Book 3M, who won last week's weekly winner circle, sold my Tesla for a loss around 5K soon after watching your videos. How about that? And purchasing Outlier. At this point, it saved me an additional $15,000. I just saved this one person $15,000 in losses. And guess what, Book 3M? If Tesla stock goes back up, you're not going to believe this. You can actually buy it again. It's a crazy idea. I know. But you could get back in if you love the company that much. Ryan, yeah, it was a snipe. Welcome. So outstanding. I love sharing these stories, and please continue to do so in the Discord. And of course, the first rule of Outlier is you tell everyone about Outlier and hit that like button. So let's get back to trading in the Outlier trading room. So real quick, what is Outlier and what does it do? Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. Well, Outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the Outlier move happens. Now, I want you to get into the annual pass for just 64% off right now, but that ends in 2 days. In 2 days, prices are going up. The sweetheart deal, as we're calling it, will end on February 14th. If you already in your trial and you want to go ahead and upgrade, just shoot us an email and we'll take care of the rest. Now, my style of trading using Outlier is called the golden ticket trading strategy, and only price pays. It always starts with the market. Let the market tell you which direction it's going. With the SPY, 10 over 20, price over the 50. Let's go to the SPY. Right now, we might close under the 10 right here, but we have the 10 over the 20, price over the 50. So this is technically a bullish trend. We had to close under the 20 period right here, which is why it's circled, which is a giant red flag to me. The market has gone sideways for 2 months now. 2 months now. You wonder why things are hard right now? The market's gone sideways for 2 months. And why has it gone sideways? Well, I can tell you one thing. Market breadth has been just evaporating. Now, what does market breadth measure? For Outlier, it measures how many stocks are on the buy list versus how many stocks are on the sell list. We have 18 new buy signals today, or we have 69 nice sell signals today, right? We have 69 sell signals versus 18 buy signals. Because of that, the market breadth is showing one thing, and that's it going down. And it's been going down for a hot minute. Been a hot minute. It peaked around, what day was that? January 27th, and has been going down ever since that point. And that market breadth, consider it this way, right? How many people are down here in the pits yelling, buy, 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 right? Now, I know there's no pits anymore, but get the objective here. How many people are in the pits yelling, buy? A lot less than there used to be. In fact, more of them are starting to yell, sell, sell, sell. And so while it feels like the market is trending higher, technically it is still in a bullish trend. When the breadth doesn't align with the market trend, it gets really difficult trading, right? And that's why I call it the master key. The master key is when the SPY has a buy signal, which it still does. The market trend is bullish, which it is. The market breadth is bullish, which it is not. And then each sector that I'd be looking at is bullish as well. And we just don't have that right now. So for me, I don't have any trades that I'd put on, but I do have a couple minutes. So if you want to take a look at a couple trades, throw them in the chat. Throw some stocks in the chat and we'll take a look at those real quick. I would absolutely love to do that for you. No trade set up for me today, but that doesn't mean we can't look at the markets together. So in the chat, drop in what you got. And let me see if I can catch up on here. What do you usually use to set your stop loss at? Half an ATR. We talked about ATRs in Tesla a little bit ago. And Tesla has basically a $20 ATR, which means that I would give it $10 to find out if my trade was going to work. Now, that's pretty huge. When you have a large ATR, you need to have a smaller position. When you have a small ATR, you can have a bigger position, right? Because you're sizing for volatility. So let's catch up on the chat here. Who do I got? Let me start up here. Wes. Okay. Manny says APG. All right. So APG, in fact, I think that was one that I talked about over the weekend. So this is perfect timing, APG. Let's jump deep into APG real quick for Manny. My friend Manny, mi amigo Manny. Let's go to our 6-month view here, so it's a little bit easier to read. So we got the buy signal on February 4th. And let me make this bigger so we can all see it easier. Got the buy signal on February 4th. Let's highlight here, February 4th. There. Got your 10, 20, 50 all crossed over on that buy signal. And then it was at G1 on the heat map. So how greedy was it? Between 0 and 50, it was at G1. So not super greedy. When I look at a stock and I look for my exit points, I really focus in on taking profits as it moves up on that greed scale. So between G0 and 25, I give it a 10-point spread. So if it starts at G1, which it does here, I'd be looking to get out G11. So from G1, 2, 4, 7, 10, and 12. So the 12 happened on February 11th. February 11th was here. So for me, that would have been a little win. 46 cents, not all that much, 1.22%. That's how I would have traded it. I'm telling you, that's exactly how I would have traded it. And I think I went over that on Sunday's video, was exactly that in and out point. So this one is below its 20 period moving average. I would not continue to hold this one if I were in APG already. Perhaps the market needs some breadth mints. I agree. Thoughts on CADL? Let's look at CADL. Cool. CADL looks pretty sharp from here. Right, you got your 10, 20, 50, all pointing north. And I don't see, well, there is an overhead order block up here. Got a little bit of space to run though. You got 24% to run. I would not even stress on that. So let's take a look. Do we have CADL in Outlier? We cover 2,500 stocks in Outlier. It doesn't look like we cover CADL. Oh, we do. Okay. Nope, we don't. If you ever have an issue like this, double check and type it right up here in the search bar. That's what I do. We don't cover CADL. So for me, looking at this, I mean, the 10, 20, 50s all pointing north. I would just watch, and if it closes under the 10, that would be a red flag for me. But nice one. Got time for a couple more. I thought SMA equaled EMA. I'm changing my settings in Thinkorswim right now. Oh yeah, dude, no problem. But if we look at a couple earnings recently, like SoFi, a couple big name earnings like SoFi, got monkey hammered. Palantir did the opposite, where it gapped and goed. I know that's a word, gapped and goed. It could go either way, and because of that, I personally wouldn't trade it. But you know what, dude? If it continues to run up higher, that could be a great one. EQIX. That was the one we looked at for Manny this morning, right? EQIX. Oh, look at this. Cool. So Manny, we talked this morning and how it looked like it was going to gap down, and now it looks like it's going to close over that 10-period moving average. It's got earnings, though. Did earnings already happen, or is that coming tonight? Earnings scheduled for February 12th. Bro, again, I don't like to trade into earnings. I would absolutely close this right at earnings at the close today. But that's just me. You do you. You do you. We'll do two more. We'll do Christian, and then we'll do the business cat, because who wouldn't want to learn from the business cat? Christian says net. Cloudflare. Okay, here's a great example of a gap and go. This is beautiful. Let's look at Outlier real quick. All right, let's zoom in to the 6-month point. So yeah, Outlier had that buy signal, that sell signal right there, captured a good amount of gains in between the two. But it's continued on after earnings, and this greed value is literally the max greed value. It cannot go higher. That concerns me. I don't know if I've actually seen a G50 before. Because it is at G50, I would give this the tightest string, the least amount of room ever. Because like I say with this behavioral heat map, the further you stretch it, the harder it can contract. And because that's already at literally G50, the max greed, it can't get any more greedy. Which means if all the buyers are there, who's left? What are the buyers left to do? They're left to turn into sellers. I would be very, very cautious on net, but outstanding work. Well, that's going to wrap it for me today. Listen, I really want you to do me a favor. Put in the chat, if I didn't get a chance to look at yours, what you're trading. And just remember this one thing. Only price pays. And come back tomorrow. We'll help you save time, make money, and start winning with less risk together as a team. YouTube is going to pop up a couple recommended videos. I recommend you watch one of them, and I also recommend you have a fantastic day. Now, remember, tomorrow we'll be starting a little bit later than normal, but that's okay. I'll see you then. Talk soon.